good morning, financial professionals. Good afternoon, depending on the part of the country that you are in. My name is Dan Peterson. I'm president and managing partner here at E4 Insurance Services, welcoming you to the BREW, where we build relationships every week. Thanks for tuning in today. For those of us joining the BREW for the first time, welcome. We'd like to start the BREWcast by celebrating today's National Day. Today is National Peanut Butter Day. A lot of great ways to enjoy peanut butter, whether it's traditional PB&J sandwich or maybe a Reese's peanut butter cup, but tons of ways, whether it's on ice cream or some other way to enjoy peanut butter. It's also National Library Selfie Day and National Compliment Day. By the way, Shane, you're looking good today. How's that for National Compliment Day?
Thanks,
Dan. Be sure to share the love.
I had peanut butter on my oatmeal this morning, so
well,
I got
there you go.
2 of the 3 done.
You're looking smarter all the time. There's another compliment for the Compliment Day, so
keep them coming.
All right. Hey, today on today's BREW, I'm joined by Brady Searle, E4's Senior Vice President of Disability Income, and Shane Van Patten, Regional Vice President and a leader on our sales team. And we're excited to kick off 2024's Focused Planning Series. Each month, we're going to be bringing you a carefully crafted theme focused on your business owner clients. Last year, we looked at part of our strategic planning. We looked at our largest cases, the biggest impact cases that we had, and most of them focused around the area of planning for business owners. So we thought we'd bring a more focused approach this year, and that is one of the strategic themes that we have. This will be supported by marketing materials in our weekly secure E4Life newsletter, case studies, and weekly BREW speakers. You should have all received an announcement from our marketing team last week announcing the series and each month's theme for 2024. If you didn't, please email brew@e4.insurance or reach out to your regional VP or case manager, and we'll be sure to get you on the mailing list. Today's theme for January is business valuations, and that's a case study that we're bringing to the team, and we'll be taking a closer look. We'll be taking a closer look at the informal business valuation process. Feel free to use the chat box to share your thoughts or ask questions. Also, all the attendees are in a drawing for a CE voucher and a Starbucks gift card, and we'll be announcing the winner at the end. Thanks for tuning in. Brady, Shane, thank you for joining me today. I'm going to share my screen and bring up our presentation for today. So, business valuations. I think we'll start with some questions, and I'm going to open it up here, Shane. Why should an advisor have a conversation with a client about the value of their business?
Sure. Well, and I guess that's kind of leading up right to these questions. So before I even answer that, I'm gonna reverse it, and I'm gonna actually ask you some questions, right? This sets up the whole reason of why we want a valuation, why we want to review a business. So Brady, I'm gonna force you off of your mute button as well, but I recently had the opportunity to lead a study group, and we kind of went over the same topic, and I led with these questions, and it really led us into the discussion. So the first question is, how often do you think a client's portfolio should be reviewed? Dan, Brady, how often?
Well, I think most financial advisors would say that it should at least be reviewed annually.
Brady, looks like he agrees with that. You can go to the next question. I know this question's not on there, but a human body, just humans, how often should we go to the doctor to get a checkup? Right? What's usually recommended?
Well, that's also man, you tend to go less than the
yeah. So I said what's recommended.
You should go annually.
Annually, right? So as you can see, I'm kind of setting us up here for the future conversation, but if you had a client that had, an investment portfolio all in one stock, right? We'll call it a micro stock that makes up a majority or all of their portfolio. How often would you review that portfolio?
Well, I think, Shane, first of all, most financial advisors would say that no client should have more than 5% of their assets in a micro stock.
Agreed.
Too much risk.
Agreed. Living in fantasy land here, but hypothetically, if you had a client who had a majority of their portfolio in one stock or a micro stock, how often would you review it?
Every quarter.
Dan, you agree with that?
I would, yeah, to make sure it's still relevant. It looks like Greg Imhoff has a question, possibly.
Oh no, can you hear me?
Yeah, I see your hand up.
I think he was just trying to give me a high five, Greg. I got you, bud.
Yeah, how are you? Yeah, I just want to say hi. No, what I was saying is, man, if people had all their eggs in one stock, they'd be checking the thing every day on their phone. That's what the reality would be.
Hey, you know what? And so I didn't pay you to do this, but you set it up perfectly. Dan, go to the next question or next bullet point. I want anybody in the audience right now to really think about what most of your business owners' clients' portfolios look like. Right? What makes up the assets of most of the business owner clients that you work with, right? It's their business. If we start thinking of their business as a micro stock, and then you compare that to when's the last time we actually did a full review on the business, there tends to be a huge misalignment.
That's right.
And that's really why we need to proactively and almost have a sense of urgency that this is a micro stock in their portfolio that is supporting their lifestyle and is probably the primary source of their retirement. So huge sense of urgency as to why we need to do it. We need to review it. We know that we need to review assets and whether it's investments, insurance, a human's health on an annual basis. We all agree that if the client had a significant micro stock in their portfolio, that we'd be reviewing it even more often. Greg raised his hand. I'm going to high five him again for saying he'd probably check that daily. The problem is that as financial professionals, we're not reviewing the business on a daily basis. We're probably not reviewing it on a quarterly basis, probably not even on an annual basis. Right? This is an asset that we need to be more comfortable in getting the business owner to slow down and proactively allow us to go through a review process of the business. And I'm not just talking the 401k plan or the group benefits or even just singling out the buy-sell agreement, things of that nature. We have a process called the Informal Business Valuation that several insurance companies have available for us that we can go through that will really create the roadmap into the planning conversations and the review. So first thing I'm going to do is talk about the process. When we're reviewing a business, step one is just gathering data. And I personally love an informal business valuation because it's super simple, but it forces me to get the data. So one of our insurance company's principal, their process is they have a one-page company fact finder. That one-page company fact finder is going to give me all the information on the business, right? Who are the owners? How old are they? Do they have children in the business, out of the business? What's the value of the business? Have they done any buy-sell planning, right? Who are they going to sell the business to? There's just all sorts of data they're going to give us. The second part we're going to need is the last 3 years of their financials, which is made up of their balance sheet and profit loss statements for the last 3 years. And then if they've already done some pre-planning and have a buy-sell agreement, they'll actually even review the buy-sell agreement just to kind of look for, they've reviewed thousands of them. And they've created a best practices of, what's in there, what's not in there, things that you might want to consider. They're not going to tell you have to change anything, but they're going to tell you based on our experience, here's some things that we see missing. And you may want to take it back to your attorney just to re-review. So what we've done through this process is we've gathered all the data that we need, right? We've got all the company information, we got the financial information, their buy-sell agreement, and that kind of creates the initial beginning of reviewing the business. that roadmap, once we get that informal business valuation, everything starts with what's the business worth, right? Whether you're going to sell it, whether something unexpectedly happens, how it's supporting your lifestyle. Everything starts with the value. But once we get the value through this informal business valuation, we have all this information on the business itself, financial, the people involved. It creates a roadmap that allows us to get into discussions and create priorities around, what's the plan to exit the business? Do we have a buy sell? Do we need one? Does it need to be reviewed? Do we need to review the executive benefits? Do we need to review the group benefits? For those of you that are doing 401ks, do we need to review the 401k plan? Do we have any key employees that we need to make sure that we retain so we can make it to the exit strategy that we want? Do we want to reward those key employees? You might even just find out what keeps the business owner up at night, right? Those types of conversations. You are in a full review process at that point. We're creating opportunities, but more importantly, we're creating priorities. Which of these are most important? And it kind of walks us right through the line.
Again, so Shane, that's really the reason we're starting in January with business valuation, because as you just said, fairly eloquently, another compliment.
Keep them coming.
It all starts with a business valuation. That becomes the impetus to having further conversations. Next month, we're going to move into the buy-sell plan, right? All of the things that are incorporated into a buy-sell plan. But any good buy-sell plan is going to say something's going to happen and the value of the business is established through a certain methodology, right?
For sure.
So if you're going to do the rest of the planning, understanding the value of the business, having a third party assist in that so that it's not emotional, it can be rational, logical, look at the numbers so that we get to a value based on various methodologies. But that's what I really like, is it all begins with that valuation.
With a valuation, and I think it's the process they've created, right? Giving us all the data we need, right? Who's the company? How are they taxed? What are all the financials for the last 3 years, right? We want to check what's the health of this business. Now, the last part is the why. Why would a business owner want to go through this? Again, we have to have a sense of urgency. Majority of their portfolio is one stock, one micro stock, right? It's their business. And we have to remember this business is supporting their lifestyle. And I'm going to ask Dan here in a second to talk about the 3 stages of a business, but a lot of these clients are in what Dan refers to as the perk me stage. And then the health of this business is so important, not only to the owners, but the employees, but it's really supporting that owners and their family's lifestyle. And again, this asset is the primary source for most business owners when it comes to retirement. So Dan, you want to talk real quick?
The 3 phases that I've always learned in a business, and I've been involved in starting businesses and building businesses and running businesses, and even selling businesses or buying businesses. But the 3 phases you look at for your business owners, the first phase, I call it, is the survival stage. Am I going to make payroll this week, this month? That's the big challenge. Do I have revenues? Can I invest back in my business? Is there any income coming out of my business? It's really that survival stage. And this is the business valuation really focuses more on businesses that have revenues of $500,000 or more. Correct, Shane? It's not correct. It's not dealing with that business.
Not startup companies, $500,000 or more, of at least 3 years in the business, so we can get the financials.
The second phase is what we just talked about, the perk me stage, and that's where business owners tend to start running things through their income statement, things like a country club, a golf membership, sometimes cars, trips. You walk in a business owner's office and you see exotic mounts to Africa, from game that was brought back from Africa. That's the perk me stage. Those are the things that, and it's not just perk me on trips and other things. It could be benefits, right? That they're putting away, profit sharing, other types of things that they're doing. But that perk me stage is when you have a healthy business and it's benefiting the business owner's lifestyle. And then the last phase is the sell it stage, and that's where you clean up the income statement. You try to drive as much of the multiple of income so that it's worth the most because you're planning to exit at some point in the future. And each of those phases have different ramifications.
That's perfect. Dan, I think this is a perfect time. Let's transition into the to the case study. So if you want to go to the next slide.
Yeah, I just want to say that the valuation doesn't just impact. Many times we get focused, Shane, in our career, we got very focused on life insurance, right? Okay, we provide liquidity for life insurance. Brady's on here to remind us that it's not just life insurance, right? There's other triggering events that we can end up with that we have to be careful about. And the valuation can also be for disability purposes. Brady, anything to add there?
No, I agree, Dan. The one thing is most overlooked is probably the disability side.
Because there's buyouts that have to happen, whether you are deceased, bankrupt, one of the partners declares bankruptcy, divorce can impact a business, all these different things, but also a buyout of a disabled partner is also part of it. So valuation is really touching a lot of different areas. Let's move on here. We'll talk a little bit about a real case, Shane, that you were involved with, and maybe you can walk us through that.
Correct. Yeah, you can, if you want to click on all the stuff there. Yeah, that's perfect. So just give you a background. It's a, we'll just call it a general company. Could be a manufacturing company, could be any other type of company, but it's just a company. Taxed as a C corporation. Can you go back there? Just to give you the kind of visual, there's three brothers. When I got introduced, it'll be in 2009, three brothers, each owning a third of the business. Each of them were married. Each of them were in their mid 50s, and each of them, they were planning to retire within 10 to 15 years. So that's kind of the background of where we're at. So in 2009, this is very recently after they purchased the business from their father. If somebody can just click on all of them, that'd be great. At that point in time in 2009, again, shortly after they bought the business from their father, they did planning, right? So they got for the sale of the business, they got a formal valuation. They knew it was valued at $4.5 million, right? You got three brothers, so we got $1.5 million equity per owner. At that point in time, they went to an attorney. They created a buy-sell agreement. And for the death trigger, they decided to fund that buy-sell agreement with 15-year term insurance. So what they did is they had the company buy a 15-year, $1.5 million term policy on each of them, right? Everything that was great planning that was done at that point in time. So as we said, this is a micro stock in their portfolio, should be reviewed periodically, but it hasn't been. So 13 years passed. So not only did they not check it daily, Greg, they didn't check it quarterly, Dan and Brady. They didn't even check it annually, right? Check in on how their micro stock was performing. I encourage the financial professional, hey, when's the last time they've had a health checkup on this ginormous asset in their portfolio? And she was able to present the idea of, hey, look, why don't we do a review? And it kind of starts with the valuation. Through that, we're going to gather all this data on you. So what we did is we were able to get that the company fact finder, one page, told us everything about the company. We got the last 3 years of financials, again, which are balance sheet and profit loss statements. That since they already had a buy-sell agreement, we said, hey, why don't you just send us a copy of the buy-sell agreement? We'll have them review it. So we used Principal, the insurance company this time. We sent it in. 2 weeks later, we got an informal business valuation. Had about, I believe it's 5 different methods for valuation. They talked about which one was most appropriate for their business and why. And we also had Principal's advanced markets department made up of CPAs and JDs that have thousands of buy sells they've reviewed, give us their guidance on what they saw and more importantly, what they didn't see in the buy sell agreement. So fast forward now, again, it was from 2009. It's now 2022. It's been 13 years. The good news is the valuation came back at $15 million, right? They've had some pretty significant growth over that 13 years. Valuation 15 million, it's $5 million per owner. Bad news is the funding for the buy-sell agreement for death was still at $1.5 million per owner. And, at least need to be aware of that. Term insurance is running out in 2 years. Here's the most alarming news. So was in the review of the buy-sell agreement. In the buy-sell agreement, typically you're going to see some sort of valuation or guidance on how they would come to a valuation on the business at the time of death of one of the owners. This buy-sell agreement specifically listed out a dollar amount that in the event one of the owners, again, they're each brothers, died, they would be able to buy out their brother's third of the business for $1.5 million. Well, that individual's equity was $5 million, right? How would your sister-in-law, surviving sister-in-law, feel about that? Brady, the first time I brought this up, he brought up a good point. What if the business was only valued at $2 million, right? But now you're paying out $1.5 million for a third of it. Does that make sense? The other part, which is extremely common, is it didn't even address what happens if you become sick or hurt and you can't work, right? So there's no real disability trigger in the buy-sell agreement. So you can go to the next page. From the financial professionals' viewpoints, the good news is she knew that we had solutions to their problems, right? We identified them. We know we have solutions. Great news is again, by going through the data collection stage, we have 3 years of their financials. We were able to see that they were sitting on $3 million of cash. And why that was important is, one, it gives us an idea of what their cash flow was, what they're sitting on cash, but it gives us an idea of what kind of plan could we put together for them that's meaningful and affordable for what they want to try to have to accomplish. So we knew what kind of budget we were kind of working with. Wasn't really tied to this one, but $3 million of cash, again, going into a conversation, what's it earning? Why is it there? Can we use that cash more efficiently, right? There are some institutionally priced life insurance that we can get balance sheet neutral, higher yield, and still use the insurance provided for key person or buy sell, but beyond the scope of this presentation. But a lot of cool things that you can find out of that. So from the business owner's viewpoint, they thought this advisor was a absolute hero, even if they didn't do anything else but this part. First thing they did is they went back to their attorney. First thing they did is they updated the verbiage on the buyout. They got rid of that $1.5 million number and put in a definition of how they were going to come to a valuation upon the death, but also a disability, right? So they not only did they update the verbiage, but they also added in additional triggers. Specifically in this example, it was disability. Through this process, they were committed to spend about $100,000 a year to fund their plan. So what ended up happening for the advisor is they said, you know what, we need to do about $7.5 million. So $5 million for each of the owners based on current valuation. They anticipated over the next 10 to 15 years, the business was going to continue to grow. So we layered in another $2.5 million for key person today, which would blend into funding the buy-sell agreement as the business grew. We looked at disability buyout insurance. I learned something very interesting during the process of this is they weren't real excited about the disability buyout insurance, but one of the things that concerned them was who determines whether the owner, again, in this case, there's family, it's brother, is disabled, right? Who determines that definition of disability, right? One of the brothers might come in every day, but can't perform or do his job or occupation the way he should and still expect to receive the reaps and rewards of the performance of the business. The other brothers might not feel the same way, right? They might say, no, you're definitely disabled. So by having this disability insurance in place and using the qualification of the insurance company as the agreed upon definition, meets the definition of disability, it worked out really, really well in this scenario. Brady, I don't know if there's anything else that you wanted to add on that piece.
Yeah, I mean, as you said, Shane, it makes the claim determination and takes it away from the partners who happen to be relatives. And then secondarily, the amount, is funding, it's becomes a down payment towards the liability, and how they fund, it's having some cash to start, having them turn over their keys to the business, and then the payout, the remaining is determined based on the formula.
Absolutely. Well, and again, through this process, we saw that they were sitting on $3 million of cash. They had liquidity to be able to do stuff, but would they rather use the $3 million of cash that they have on hand to buy out a brother for death or disability or go towards it? Or would they rather have, insurance, right? Tax-free cash injected into their business when something bad happens to one of their owners, to be able to use that to buy out, the surviving spouse, their sister-in-law, in that process. The last one, this one, I thought was really, really neat. So by going through this process, again, it was the data we collected. It was the financials. Principal, their advanced market.
It all began with the informal valuation.
I didn't even catch this, but it was the advanced markets department of principal going through the informal business valuation and creating it. Notice there was $10,000 a month going out of the business. And upon, further research, asking, hey, well, where's this going to? They were using $10,000 a month to pay for dad's long-term care, right? They bought this business from him in 2009, and now they're using the business to pay for his long-term care. And we asked, hey, is that important to you? In retirement, having this new $10,000 month additional expense to your income, to your retirement lifestyle, do you want to plan for that? And it was very important to them. So being that this was a C corporation, right? This wouldn't work for owners as of a pass-through entity, but being it was a C corporation, they were set up as W-2 owners. We were able to do a 10-pay traditional long-term care plan for each of the brothers and their spouses. We chose the 10-year because they wanted to retire in 10 to 15 years. The company was able to pay the premium for the owner's spouse. All of it was tax deductible to the company as health insurance. All of that income did not show up on the owner's W-2. Again, it was paid up in 10 years before they retire. And if them or their spouse ever needs care, those benefits are paid out tax-free, pay for long-term care expenses. We would have never uncovered this just in a traditional, again, it hasn't been reviewed for 13 years, but the amount of different things that we were able to get and into the conversations that we were able to get into was incredible. So if you can go to the next page. Well, and even before we jump into this, by the way, the advisor did make over $75,000 of revenue by helping clients go through and review their biggest asset in their portfolio.
Their micro stock. And fill the gaps to things that were important to them. She didn't sell anything. She just helped them identify what their plan was and how misaligned all of the planning for the business was. There was no alignment, and she just gave them options, and they prioritized and said, here's what's important to us. This is what we want to do. But even through this, planning and it's done, this isn't a set it and forget it. Right? When it comes to business planning, it certainly isn't for estate planning. There are absolute ongoing conversations that need to happen. A good friend of mine, he always says, this type of planning, it's a process. It's not an event, right? So we completed part of the process, what was important to them in 2022. But going forward, we have a lot of additional questions, right? Who will they sell the business to? Are all brothers going to retire at the exact same time? Is it going to be layered? What's going to happen? Do they have other non-owner key employees that are extremely important to this organization, right? Do we need to make sure we can retain them for the next 10 to 15 years? We probably also want to reward them. How do we do that, right? We can review their group benefits. We can discuss and lay out retirement plans for each option. The other one that's not on here, but estate planning, personal estate planning, right? For these business owners, whatever happens on this business balance sheet is always going to make its way down to their personal balance sheet. So yes, we've done the silo business planning, but at some point,
we're going to potentially have estate planning that needs to be done, and we need to do that as well. So again, what we need to take away from this is that business owners have a microstock. There's a huge sense of urgency to not wait 13 years, and they need to be having these reviews on an absolute periodic basis. So with that, I'll be quiet and take a drink of water.
Well, great, Shane. That was a great case study. As a follow-up, we've got some additional information. I know you have the process is a company fact finder, right? There's a one page. Brady, you're involved, the first week on the job, I think, working with you, I was doing a buy-sell plan, had done second generation buy-sell planning, had the insurance in place. They ended up selling the company in this process to a third generation. And in reviewing the document, and we'll talk about this next month, you immediately honed in on the disability provision. And so reviewing those documents is part of our process. And then there's also, Shane, you also use an ideal business profile, right? You've got a profiling piece that we have on our website that we'll send out.
Yep. Yeah, especially for the companies that work and don't work. I mean, pretty much any company that's making 500,000 or more, been in the business at least 3 years. A lot of those companies that don't work well. First one I think of is farmers, ranchers, right? Because the majority of their business is the valuation of the land. That being said, we do have another insurance company nationwide that really specializes and has a planning program designed for farmers and ranchers. The other area, unfortunately, financial advisors, right? Individuals that are paid on commission or recurring revenue. It's really hard to do that. So big companies that do work really well. I mean, again, think manufacturing, dental office, law firms, electrical companies. I mean, goes on and on and on. So there's definitely more that are available than less.
We have a question here. Greg, did you have a question to ask?
Yeah, you know what? I just took my hand down, but yeah, you kind of hit on a little bit of it. I've been reading through it. I like all the advanced research library on E4's site, right? So I've been going through a lot of this stuff, but as it pertains to like getting started here with this series, want to take it real serious and start focusing on the business market. Like in my area, I guess it's just how to organize like a get started plan, like get started in the right direction here. You mentioned having or seeing that that business kind of fact finder from principal or maybe like a sample valuation, from them. And then Shane, you just hit on, what's a generic kind of general profile of companies to kind of go after. Do you guys specifically have any direct marketing stuff that I can use, or I don't know if you have any type of preloaded stuff I could put on LinkedIn, to send to business owners in a group on there, or just kind of more action steps, I guess, to kind of get going on the target.
Yeah, as a follow-up, we will have our ideal client profile for a business, so it'll jot some things down as you think through what that looks like with businesses you work with or that you want to work with. And then the one-page fact finder, and we have various ones available, but Principal's a really good one. And then, your ability to obtain the 3 years of financials. Turnaround time is usually 5 to 7 days. We can actually get advanced market attorneys on the line to review that, and CPAs, other types of things to really understand that informal valuation. And then we schedule a follow-up call with you to go over the informal business valuation and then talk about next steps. And we do have some sample outputs for you that you can look at.
Greg, I would say I wouldn't necessarily market just the informal business valuation. Yes, that is the starting point. Mm-hmm. I think for most business owners, again, you have to get them to slow down. Mm-hmm. you have to create a sense of urgency of why this asset needs to be reviewed, not just every 13 years, but periodically, right? It is that micro stock in their portfolio that supports their lifestyle. It's the primary source of their retirement. We need to be involved. I had one advisor who uses this process. Guess who they invite to every company planning sessions going forward? This advisor. He has a seat at the table because he took them through this process. And they've done their initial planning, but every year as they do their company planning, they want him to be there. It's incredible.
Very good. And I know Danielle has actually put some attachments that you can download in the chat. So there's one is if you don't want to wait for our email, there's some here that have the approaches and then the informal sample of that informal business valuation that you can click on and download to your documents. Any other questions? All right. Well, great talk on this process. We're going to have more coming out on it next month. A real focus on the well, next week we'll also have an advanced market attorney talking about informal valuations. So we'll review that. So another approach on next week from one of the carriers, and then on the 14th of February we have Chad Flanagan, who's has done a lot of formal valuation. He headed up the entire business valuation team at Eide Bailly, a top 17 accounting firm, and he's done a lot of buy-sell reviews, formal business valuation. He's a board of director for Eide Bailly, so you've got a top 20 accounting firm in the country who spent his career looking at the good, the bad, and the ugly when it comes to valuation and what planning can do. So nothing says I love you like talking about buy-sell planning on February 14th. So keep that in mind as we go forward. But as we wrap up today, we've got a drawing, and Shane, can I get a number between 1 and 25?
11.
11. 11. Who is the lucky winner? Greg. I guess you talk enough, ask enough questions, you get you get a CE.
Wow.
And
you got to give him a high five, Dan.
Thank you. Give you a high five there. All right. All right. Well, thank you for joining me today, Shane and Brady. If there's anything else, please reach out to us. We'll be sending more information out. Next week, we have Stephen Alloy, Mutual of Omaha, how a business valuation leads to sales, and that will be our topic. And we'll be reviewing their business valuation service and how the solution provides opportunity for the producer to increase business clients' life insurance and other related products. Thank you, everyone. We'll see you next week on The Brew.